Okay. It's Goog. We're Goog. Okay. All right. So you should see charts here of the Qs. And then, and first of all, welcome. This is the tax loss harvesting class. For those of you that are gold members, you are in the right place. And then for those of you that signed up for this class separately, hopefully you found it. So let's dive into this. And first, I just want to do a little cleanup on my end of year portfolio. Bum, bum, bum. And I just want to be clear where I stand on this. And again, I'm the first one to say I could be absolutely 1000% wrong on this, but I just want to be clear on what I'm doing. And I've gone over this a couple of times already, but put call ratio, sector reshuffling, we've got a weak Santa Claus rally. Everything in the past, when this happens, we get a violent sell-off in the first 1 to 2 weeks in January. This time could be completely different. But regardless of that, I have exited all longs, and I'm going into the new year with some butterflies that are very low risk on XLK, XLY, and SPY. And then now I'm long puts on QQQ, and I am short NASDAQ futures. So I'm definitely going in with a bearish bias, and I could get my teeth kicked in. So obviously this is all about risk control. And again, I always want to say, like, hey, just because this is what I think is going to happen does not mean in any way, shape, or form that it's going to happen. But when I just kind of look at the evidence and just say, hey, when we've seen this situation before, here's what's happened in the past. And pretty much every time we've had that situation, we've sold off pretty hard. So, of course, this could be the time that we rally like a bat out of hell. And I'm fine, and I've accepted that risk. So for me, I would just say that, for me personally, the way I'm looking at January is either, I think the best position to be in is flat. I think the second best position to be in is if you're long, just kind of, focusing on what I would call those honey badger stocks. Like I like EOG and EDU. I closed those out today, but I still like them. And then if you want to get aggressive, get in a little short. So hopefully that all makes sense. We all are kind of, as we get into the end of the year, kind of setting up our portfolios a little differently. And I think the best case of action, if you have any doubts, is to be flat. And all right. So hopefully that all makes sense. And then let me, I guess I should type that up and send it out just to make sure everybody has that. Yeah, so we're going to start the tax loss selling class here. And let me just edit this out. All right, so headed into the end of the year. Well, so the only longs I'm going to have are what we're about to do. And so that's what we're going to do that together. So, so what we want to talk about here is, let's see here. And this is something that's kind of interesting. This is something I've done like every year for 15 years. And gosh, I'm trying to remember the first time, this is actually the first time this happened to me. I want to say I may have been a freshman in college, and then, or maybe even in high school, a senior in high school. But I'll tell you what happened to me, kind of, which I had no idea at the time. And then, and a lot of times what I found is that what can be your biggest, a big loss turns into your biggest learning experience, right? And so what happened, and I don't remember, the symbol started with an M. I don't remember what it was. But what happened was, and we'll talk about Snap. Yeah, we'll talk about some candidates. So, and I remember this, I mean, just like it was yesterday. So one of those telling moments, one of those pivotal moments in my life. And So what happened is, and I don't remember I think it was MSCI or something like that. That may not be it, but I remember I bought it, let's call it, so here's the course of a year. So around, March, I bought this stock it was something like $8, okay? And, throughout the year, it just kind of drifted. And then when it got down to, like $6 in June, I did what all good traders do, and I bought some more. And I'm talking my life savings here. I mean, at the time, I had like $10,000 to trade. And so I think here I put in, let's call it $5,000. And here I put in the rest. So, that real smart money management. And as we're drifting into the end of the year, and then around, let's call it October, it's like at $5. And then we get to November and it drops to like $4. I'm like, oh my God. And now my thought process is, well, it's coming down to tax time. And at least if I take the loss, I can do what? Put it on my tax return, right? I can at least, record that loss. And then what happened was that, then it drifted down in December to like $3. And then now if we do a microcosm of the last week in December, okay? So here's, Monday, Tuesday, Wednesday, Thursday, Friday, essentially the last days of the year. So it was like, $3, $2.80, $2.70, $2.60. And then on Friday, it traded down as low as 180. And of course, that's where I got out. It's like, shit, I was hoping, I was waiting, like maybe this thing's gonna get taken over, and finally I had to get out. And I was amazed at how far the price dropped. I mean, it dropped by like 30% or something like that. But then an amazing thing happened, is that after that happened, and after I got out at $1.80, then so now if we look at January, so here's January, and we look at week 1, 2, and 3. So week 1, 2, 3, 4, and went from like 180 up to 250 the first week, up to $3 by the second week, and by the end of January it was like at $4. And so what happened was, and I remember my stepfather Lance, and he would we talked about this, and we started talking about the whole concept of that for retail, and again, it's not institutions that do this, it's retail. And there is a characteristic of particular stocks that we're looking at. And, because retail always clings to hope. And if you're always clinging to hope, you're doing what? You're going to wait till the last minute until you have a fixed line in the sand, which in the case of today, it's at 3 o'clock Central Time. And a lot of the stuff is, is probably has already happened today from the ones that I've been looking at, which is fine. But the key is that nobody's buying today. Nobody's buying those stocks today. And so there's a lot of downward pressure. And essentially today is soaking up the last of the selling, okay? And when you soak up the last of the selling, there's nothing to do but rise. So that's the kind of stuff, that's the kind of stuff that we want to look at. And all right, so any questions on that? So while for this year, GoPro, well, now we want to talk about the kind of stocks that work too. Now for this year, the way I'm going to divide out my portfolio, when I wake up, the first trading day of 2018, okay, so 2018, it's going to be divided into two sides. So I'm going to call it my regular positions, and then I'm going to call it my essentially tax loss harvesting, okay, which is kind of a unique situation. So my regular positions, for various reasons, are all bearish, okay? I have no bullish positions here. So I've got put butterflies on SPY, XLK, and then XLY, all targeting the weekly 21-period moving average. And then I've got long puts on Qs. And I have got short the NASDAQ futures. for various reasons. The 10-day moving average of the put-call ratio is abysmally bearish. The skew 135-ish. It's at 137.82 now. We've seen violent sector rotation in January every year except for the surprise election. The almanac even says, hey, if the Santa Claus rally the last 5 days of the year kind of doesn't really happen, look for massive selling in January. So there's a lot of things pointing to that. And I'm the first one to say that maybe because it's that obvious, it's not going to happen. So it's all about position size and risk control, right? So I kind of look at it as like, wow, there's a firing squad down the road and I can walk right into it, or I could walk around it. And so this is my attempt to walk around it. Now, at the same time, I don't like to only have short exposure, and to have long exposure, I want to go into this unique situation called tax loss harvesting, and I'd like to find 3 to 5 positions that meet the criteria, okay? And the holding period for these can be as simple as 2 to 3 days. I mean, you know, hey, if you're buying something, and you could do options and you could do stocks. Some of the stocks won't have options on it, but a lot of the stocks, because of the pattern that they've had, are not that expensive. So, you know, you can just hold them for a week and flip them out and different things like that. So, all right. All right, so any questions just in the general idea here? Does it all make sense? I mean, it's pretty simple. It's just one of those things that if you haven't seen it before and you haven't gone through it and you have never experienced it, you know, it's gonna might be some new concepts. Yep. Hey Jay. Yep. That's what. Yeah. Right here. That's what we've been talking about. Tax loss harvesting. Okay. So how far out am I bearish? Not long. All I'm looking for is this to happen. See right here, when we went to the weekly 21 EMA, I'm looking for the same thing to happen here. I'm definitely not going to short Netflix. Okay, so all right, so now let's start looking through some candidates. Netflix kind of made me it's like I felt like I was a prison cellmate of Netflix. All right, so let's look at. So while one, I do like to get a sense of what's going on in the market by looking at new highs. You know, who's making new highs today, and that's always very telling. And just sort by volume. Then, and just kind of say like, oh, okay, so who's cruising today? So you got volume. You know, what are the stocks that are coming up? And I always just like to get a sense of where is money flowing into. And these are certainly not stocks that I'm looking for in terms of tax loss harvesting. It's interesting. There's a lot of random names today, not a lot of brand name stocks making new highs today. And TradeStation. Why not sell call spreads? You absolutely can. So yeah, as long as if you understand all the nuances of options, you'll know that selling a call credit spread certainly has a better probability. Because I'm looking for a greater than expected move. So if I'm right, then the put is going to, be a nice multiple of my risk. Whereas of course the call credit spread is a fixed, much smaller potential reward. So with the QQQs, the call credit spread is actually going to give you a higher probability of success, okay, which is great. And it's also going to limit the potential reward. So I love call credit spreads. I think they're great. In this particular instance, since I'm looking for a bigger, faster move, I'm going with the long puts. And if I'm wrong, obviously the puts are going to lose value. I'd have more at risk. The good news is the puts tend to hold on to their value, a little bit better than calls if it's going against them. But we'll know by the second or third day in January if they're going to work out or not. For deltas, I tend to sell at the money. I mean, if you sell one standard deviation away, you're risking 10 to make one. So if it blows up in your face, it's kind of a nasty. But if you're selling at the money, you can risk 1.5 to make 1. So I always like that risk reward a little bit better. All right, so what I want to do instead here is I want to come over here and then just say new yearly lows. And let's see what's going on here. And you'll see, and I actually am not looking for, and we can look at some of the stocks that we've seen this year, like Snapchat, which is a possibility, but that one is so institutionally dominant that it doesn't really fit the pattern. And so I'm looking more for these kind of obscure stocks, typically not high volume, okay, which is what I want to see, and they're typically going to be fairly low priced. So if they don't trade options, it's not necessarily a big deal. Now, in terms of volume here, am I interested in trading something that does 3,000 shares a day? Of course not. But I'm not adverse to, around 50,000 shares and up, depending on the pattern. Actually, that's a great idea. That's something I've talked about too. And in fact, let's set that one up real quick on the VIX as a call credit spread. And I don't do the VXX. I don't like the VXX. That one's pretty jacked. But if we go and we look at the 11-day out options, and we're at 10, so buy the 10 and like sell the 13, that's not too bad. In fact, let me just see what that looks like real quick here. Yeah, so you can buy the 10 and sell the 13 for an 80-cent debit. Not too bad at all. And so you're risking $800 to make potentially $2,200. And let me do that one real quick. Jan 10. Long call vertical. So on something like this, let me see, doing the 10 and then selling the 13. That's the wrong one. Clear. So yeah, it should be about an 80-cent debit. And let me see if I can get filled on that. Yeah, so that one filled. So I'll put this one in here as well. And then we'll start looking at some of the harvesting. Let me do this. These are also just good hedges too. If you're going to hold a lot of long exposure into the new year. Pop up a few points in early January. Okay, so now let me come back and let's take a look at all right, let me find my quotes. And now let's go through here. And what I want to do is just kind of take a look here at a weekly chart. We're going to look at a monthly chart, a weekly, and a daily of some of these key stocks. And a lot of these, frankly, will not meet the criteria. But I want to show you exactly what I'm looking for. So if we look at ADTN. Okay, and you got to think of this as purely psychological. But take a look at what's happening to this today. Okay, so here's a situation where you have the same thing, where you have a lot of people that buy here at 24, and or even a lot of people that have owned this, up at these levels, and we got the rally, and now they're hoping for a rally to save them, and they're not getting it, and so they're just dumping it. So that's actually a potential one right there. But that's the kind of stuff that we're looking at. The only thing I prefer to see is more, I prefer to see more of a situation where we're more like this towards the end of the year. Although this one's intriguing. This one's intriguing. You can see all the volume that's coming in here. And this is very, very typical in the situation where, essentially the market makers wake up in the morning with all of these sell orders. And so they just step away from the bid and everybody gets screwed. So that's a potential one. And then let's look at this is more something that I like to see. Now, this particular one, Sears Holding, it's like, gosh, but this is very, very, very typical pattern here. So you can see, I mean, essentially, look at this, just death, slow death. And so this is something where if we did this, it'd be something like, okay, we're buying it at $3.50. Maybe we could sell it at $4.50, or right around there. And yeah, exactly, Nation. We don't, yeah, and that's just it, is we want to make sure that it's this is the pattern we want to see, where it's just constant selling. And yeah, not news related too. So for, you can see here, if you look here on, let's see, 15, 15, 15, and then we can also go back and see how it did the prior year. So this one, you see you got a little bit of a bounce into the new year, but not much. To me, Sears is a death company. So, this is one where, again, we can kind of come back and look at this, but we'll find some stuff that kind of fit the criteria. But this is one certainly where we're just seeing persistent tax loss selling. Exactly. I think the guy that took it over he actually wants to run it into the grave, put it out of business, and then turn all of their space into office space. Okay, so Permian Trust, this looks more kind of like an oil company. It looks like there's a spike in volume here, maybe some news there. And then the other thing I want to look at too is that, is there that kind of pattern of continued selling into the end of the year? Yeah, Eddie Lampert. So Biotime Inc. So, again, you just kind of see this death. You can see from today, we got a little bit of a death roll going on here. Wow. Major death. Let's see, FGB. Yeah, this is a pretty good, pretty good price action that we're looking for there. All right, let me see what else here. So, and then what we want to do is when we find a few candidates, is then we kind of want to do a little and see what's kind of going on at 2. And let's see. And we can just kind of see like, all right, is there anything anything in the stock that's a little crazy or fishy or anything like that too? And obviously a lot of these stocks are having big problems, right? Or they wouldn't be selling off like this. So if we look at say just the news on it and to say, okay, what is EARN doing? Ellington Residential Mortgages. So we got a CFO to retire. Yada yada yada. Nothing exciting. It's just looks like it's just a company that isn't too well run. So interesting there. So yeah, we'll keep a look at those, and then we also want to look at some of the what I would call more of the brand name stock. So Snapchat is Snapchat. Freudian slip. Chat is an interesting one. The main problem is that it's largely driven by institutional, but you can see we are getting some selling today. It's a little different. It looked because it did take much of a shot right here. So we're not seeing that. You're not seeing a lot of what I would call continued pressure, but it definitely has potential. And then if we look at GoPro, certainly anybody that owns this stock is bailing. So this one actually looks pretty good. And what I like about GoPro too is that if we wanted to, we could look at options on it. And let me take a look and see what those options look like on it. But it's such a small, it's a low price enough stock that, frankly, I would consider just looking at the looking at those here. So if we look at GoPro, the Jan 21 option, the January monthly options. If we go and look at the $7 options, and really we just want to know how much premium are we going to be paying here. So the $7 options have 21-cent premium. Okay, that's a lot. I mean, that's like, a third of the price is premium. But if we go to the 6s, it's only 4 cents. So on something like this, I'd either get the $6 call options, okay, or just buy the stock itself. Now you could do, a spread and stuff like that too, but it's a pretty small, it's pretty small this way. So what I'm going to do here is, let's see, GoPro. So initially here, I'm going to buy some of the stock and then some of the options. So let me post this here. All right, so for tax loss selling, and let me also post the options here. So I'm buying the stock, and then I'm also going to buy some of those $6 calls. GoPro 119 Jan 18.6. here I'm buying GoPro stock as well as some of the $6 and monthly calls. All right, so that should be there. Yeah, I'm sure we might create a little activity there. And again, we're not looking for, you know, a huge move here, but all right, so yeah, now look, and we all come in here and we buy, you know, we buy a bunch of these calls. So remember what happens when we're buying a call. So when we buy the call, what's happening is that a computer, i.e. market maker, is selling us the call. It's taking the other side of that trade. But as it's selling us the call, it's also simultaneously buying the stock to create a hedge. Okay, they make their money on the premium. So I mean, it says so. I would just say, by the way, you don't need to chase this. If you just want to put it in a limit order, we should see GoPro come down a little bit. So if we, you know, if everybody panics and tries to get this, it's going to keep going higher. If you just put it in a limit order, it'll calm down. But for every order that's placed, so every 10 calls that are bought, remember, there's a machine / market maker selling you those calls and then simultaneously buying the stock to hedge their position. So like they don't know what the hell is going on right now. It's like red alert in GoPro. What the hell's going on? Yeah, so that's what's going on. So we're moving the stock right now just because we're buying a shit ton of options on it. Yeah, really, I mean, we'll probably see this show up on Twitter. Like, we've got a hedge fund loading up on GoPro. Hedge fund loading up on GoPro. Did you really, Anish? That's awesome. All right. So again, remember, this is not, this is just the market having to adapt to our order flow. Now, with targets, the thing with this is you don't really know. Okay, so what I always just kind of look at doing is, initially on any options, if we can double the options, great. I typically in something like this, would look for a move back to, on a weekly chart, back to the weekly 8 EMA as a first target, and then the weekly 21 EMA as a second target. So that would put us at $8.25 to $8.77. Sometimes you can actually get a much bigger move, but remember what we're doing is we just want to exploit an anomaly in the market that once all the selling pressure is off of a stock, it has nowhere to go but up, okay? And we just want to participate in that anomaly. Yeah, Dave, it's supposed to. It's supposed to look ugly. I don't know if you were here at the beginning, but that's what we want. We want ugly stocks that people are dumping today on the last day of the year. And I mean, essentially, they just get, they get screwed. The market makers walk away from the bid. All the selling pressure is off. So, yeah, this from a long-term perspective, I would not want to own GoPro. I just want to take advantage of a little bit of an anomaly here, where you got those end-of-year tax loss sellers, individuals that wait till the last day of the year, market makers screw them over, and then essentially, since there's no selling pressure left in the stock, you typically see a little bit of a bounce the first of the year. Now for RH does not qualify. So why does not, it's amazing how far down it's going here, but it does not qualify. What we'd want to see is a stock that's closer to 52-week lows. All right, so RH is, while interesting, and I'm keeping an eye on it because it's certainly a high profile, high short interest stock that I certainly want to keep an eye on. It does not qualify as a tax loss harvest trade. So why not Tesla? So Tesla also does not qualify. So we're looking at things where the specific pattern from essentially around Q1, it needs to be at a higher price than it is now. So that's, again, that's just it doesn't mean that, hey, this Tesla might not bounce, but that's a specific pattern that we're looking for. We want nobody in the stock that's long to be making any money. Now, so for GE, yeah, I mean, it qualifies. That one I just don't like the volume on it. It's just it's so institutionally focused. We actually specifically want to find lower volume stocks that can get moved by retail. This is a stock trading 50 million shares a day. These are all high frequency traders, batting it back and forth like a ping pong ball. So that's not what we want. We want a more retail kind of a dominated stock. Now, GoPro, if we look at it here, you can see it does trade pretty decent volume at 3.8 million shares, but certainly not 50 million shares. And yeah, so CMG, so same thing here. So for CMG, while, let's see, yeah, you know what? That's actually, it's a potential there. I'll most likely pass on it just because the options on this are so thin. But if it was trading at new lows here, I'd be all over it. But it's pretty, I mean, it's pretty close. I mean, that technically could qualify, but I really like to see those ones that are, kind of closer to new 52-week lows today. So if we take a look at Momo here, so Momo, yeah, so I like this one as well. So you got 2017, started trading at, so it's pretty much right there. So that one's kind of interesting as well. Has decent volume in terms of what we're looking for. So it's a possibility, but let's keep looking. I do like those lower volume, a little bit lower volume ones though. Twilio. I don't know why Twilio is not doing well. They charge us $17,000 a month to send out text alerts. So you'd think they're doing great, but that is actually kind of a good, now the only thing I don't like about this is that you see nobody in the stock has any hope. Like they haven't had any hope all year. So what you want to see is a pattern of kind of like newlyweds, okay? At the first Q1, you want to see like a happily married couple, and then as they learn more about each other, they start to disdain each other, and then by the end of the year, they want to get a divorce. So that's what you're looking at here. So Q1, everybody's happy, the stock looks great, there's lots of potential, and then, the slowly but surely, their spirit is crushed, and then by the end of the year, they just want out. So here, there was no spirits high at all. It was, you just started the year in a bad mood. Let's see, AGN. And AGN's pretty close. That's actually a pretty decent one. It's a pretty decent one. We'll come back to that. Let's keep looking here. AAOI. Now, this is pretty good. So when you see something like this, think about this. Again, if you go back to the newlywed scenario, all right, so 2017, it's like, we're so happy and in love, right? And then now you're down here. Now, it would be better if we were trading down here because then nobody in the stock wouldn't be making any money. But that's pretty fugly. So, yeah, let's take a look at that one. Now, it looks like there's earnings coming out. Gosh. Are there possibly earnings coming out right here. You see that big spike in implied volatility. So if we did options, we'd have to do some pretty short-term options, which is a fairly risky bet. And if you look at the bid ask on these options, that's about the worst bid ask I've ever seen in my life, second only to these. So if we were going to do this one, we would have to do the stock. We could do some out of the money options, although I am not a big fan of that. So does that make sense? So on this one, the liquidity and the options just is not there. However, we could buy some of the stock, and I may do that. Let's see. Yeah, February 22nd. So for AAOI. All right, so I'm going to pick up some of the stock here. And I'm trying to dollar position size these trades at about the same, give or take. So what about Square? So Square does not qualify. And again, just keeping in mind, although I see where you're coming from, it may be a buy the dip opportunity, but in terms of specifically tax loss harvest, keep in mind, here's the newlywed phase. All right, so there's still potential to save this marriage. If you start off here and by the end of the year you're here, then it's like a divorce. So that's what we're looking for. We want to see high spirits and hopes alive that just get destroyed. We want to see this couple in the people's court. All right, let's see. Fit. Now, you would think that this one does, but look at this. These guys have already, again, if you look at it at marriage, okay, they started the year with no hope. All right, so they already hate each other here, and all they've done is continue to lock in that hate and reinforce that hate and despise each other. So there's no hope. At the beginning of the year, there was no hope in this marriage, and at the end of the year, nothing's changed. So it's not what we're looking for. So we want to see hope that turns into despair. Okay, that's what gets us excited. That sounds horrible. We want to see people's dreams being crushed and take the opposite side of that. Trading is such a morbid profession, but that's essentially how it works. Say, we want to here. We'll do let's see. That's not bad. You got crushed in UAA. That's what we want to hear here. Okay, all right. Now this is potential. It'd be a little bit better if we were at lows today, near 52-week lows today. But again, this is one of those things where you start off with hope. And so think of it this way. And again, I'm using the marriage analogy only because my wife is not logged in today. But say you started here, happy, but from your childhood you have lingering feelings of anger, right? Well, as the stock, here you're happy, but as the stock falls, these feelings of anger are triggered, and now they start to dominate the thought process. And now the outside world is colored by that inner reflection of anger, so that anything your partner does confirms and reproduces that anger. So then that becomes a self-fulfilling prophecy, where a human being and body and mind just merged to essentially replicate the feeling of being angry, and it ends in divorce. That's exactly what we want to see. Now, on something like this, the only difference here is that we're not flushing out all residue of hope here. So it is important to see that, that flush. We want to see that flush into today where all of that is going on. Let's see, pets, simpler marriage counseling. Let's see here, PETZ. I mean, that's an interesting one for sure. That's an interesting one for sure. It's a weird stock. It's got potential. It's got potential. I'd like to see something with a little bit more history. Now this one, yeah, actually this one is pretty interesting here too. And again, I would like to see, that especially kind of that utter destruction here, but you can see here, it's just like, man, what, just utter destruction. Yeah, next year we'll have to call this class, destruction of human relationships by projection class, by unconscious projections. So that is a good pattern. That actually has some potential, and it's a little bit more of a liquid opportunity as well. Let's see. Now we may have some earnings coming out on that. Let me see when the earnings are. Do you guys see earnings on this one? I mean, the implied volatility on this one is just all over the place. Oh, February 28th. Okay. Well, so Triple D here. So we could look at the January monthly options, but again, it's an $8 stock, right? And when you got 61% implied volatility, and we come over here and say, okay, well, there's some liquidity here, and that's good, but we really don't want to get too jacked up on too much premium. And so if we look at the extrinsic value here, we can see that the $8.50 calls have 40 cents of premium, and the $8 calls have 21 cents of premium. But if we go down to the $7.50 calls, there's only a nickel of premium. So let me see what the volume is on those. I assume that's going to be pretty low volume there. Yeah, so we don't want those. And again, the problem here is essentially going to be that we've got a situation where there's not enough liquidity. So I will pick up some of those $7 calls, but actually, hold on a second. Let's look at the Febs. This one with the high implied volatility well, I don't know if that's the same one for earnings, but let me see what the difference in price is here. So if you look at these, what you can see is that the Jan 7s are $1.74, but the Feb 7s are $1.93. So for a little bit more time, okay, you get a little bit more time there. So I do like those. So let's take a look here and at what that would look like. Where is Triple D? I always laugh, Triple D. Triple D. That's funny. Okay, long stock. We'll do some long stock, long calls. I want to do February. So let's do Feb. Hamada activity there. All right, so I got the Febs at $1.80. And then for the stock, all right, so let me post these. So again, getting the stock and then the long 7 Feb. And let me post those here. And obviously position size based on, you know, your own risk tolerance. Okay, oh, now we post this. It feels really random. Well, if you look at it, Angela, it's all the criteria are the same. So we're looking for the specific criteria that we discussed at the beginning of the class. And so if it fits the criteria, then we want to add it. Stock as well as 10 Feb monthly $7 call options. All right. So any questions on that? Is the mic closed off? Let me check the settings I have on it real quick. Recording devices. Sound. Oh, maybe let me look at the properties here. Levels. All right, so if I start talking now, is that better or is that too hot? Is that normal? Okay. I just updated the levels on it just to make sure. Okay. All right, so any questions on these? So again, keep in mind, so the first 15 minutes of the class, we discussed the specific principles that we're looking for stocks that meet the tax loss selling criteria. So far, we have found 3 stocks that were worthy of buying. And Luke, I am your father. The 3 ATR stocks are good, but really what we want to make sure about is, again, we want to see that situation where, again, and the married couple analysis is the one I can think of, is that you got newlyweds that are happy and they're in love, and then the more they learn about each other, the more they despise each other, so that by the time a year goes by, they want to get a divorce. Not that that would ever happen in real life, but that is what we want to look for in these setups. Yeah, Jay, it's all at the beginning of this class. All the criteria are there. BG, I do not do spreads. Well, we're not doing it. We're actually not doing any spreads here. So we are either doing the stock or we're buying calls. So far in the class, let's see. So let's do a quick review of what we've looked at here. So all right. So far, we have done GoPro, bought the stock, and $6 call options. And then we did AAOI, bought the stock. And the only reason I didn't do options on that is because the options really suck on that one. There's no volume and the spreads are wide. But if you want to go in and do the options on it, it's fine. It's just as a group, I don't think it would be advisable because we'll move the stock. And then Triple D bought the stock and the Feb $7 calls. And the only reason we did Feb there is for a potential, if we want to hold it a little bit longer for a potential earnings run. All right, so tax loss harvest candidates thus far. Oh, the VIX, got it. Okay, sorry, you were asking about, thought you were talking about these. So yeah, so for the VIX, if you don't want to do a spread, you just buy the call. Yeah, so now I understand. Does that make sense? So yeah, I would just buy, or buy a deeper in the money call, like the $9 call. Yeah, and remember too, yeah, so good. Okay, so for VIX spread, if you just want to buy a call, I would go deeper in the money and get the $9 call. All right, so let's do this. It's 2 o'clock, so we've been going for an hour. Let's do a quick break. I'm going to leave this up here, and then we'll come back and we'll do a few more trades. Obviously, I want to make sure all your questions are answered as well. Also, just keep in mind, for those of you that want to come to our live mentorship here in Austin, the deadline for the current price on it, I think it's mentorship, is January 1st. So the ticket will go up to $5,000 after January 1st. This is just a live event here in Austin where it is limited to a small group, and then after that it's just broadcast online. But it is a lot of fun. So if you would like to lock in one of those spots, we spend 1 day doing instruction and 2 days doing live trading, talk about trading plans, money management, all kinds of fun stuff. And if you go to that page here, you'll see just kind of how it works and all that kind of stuff too. And it's a lot of fun. And it's really great if you're really serious about trading. It's a way to really kind of carve 3 days out of your life and really focus on it and develop a plan that way. All right. Yeah, and right now, yeah, we've got for the live event 11 spots left at the early bird pricing of $39.97. And it's got more information and all that kind of stuff here too. So anyway, let's take a quick 10-minute break. I'll leave this stuff up here and be back in 10 minutes. I'm going to put a little clock up here so we can see. We will be back at, oh, here we go. Back at 2:10. All right, guys, back in a few.